Hold on, guys. Here with a quick video breakdown for the trade that good if you took this AM. It was looking back at the market. Obviously, I'm not able to trade every day at the moment. I'm only able to trade about 2 days a week right now. But I'll still do these breakdowns. Breaking down the market. Based on the protocol as to trades that obviously you could have taken, just to kind of train your eyes. I know we're looking in hindsight, but I'm kind of trying to train your eyes to be able to see these moves. All right. So real quick, so looking at the market right now, right? So first step for a trading protocol is the higher time frame, right? So step one for the higher time frame is what is the institutional order flow, right? So looking at the market, right? Just talking about ICT concepts, right? Between Monday to Wednesday, that's when the market will make either the high of the week or the low of the week, right? So the low of the week happened on Wednesday. You can see that we traded through this 1 hour city, closed above it, used that support to trade higher, right? So right now, just look at the market, right? You want to always look left before you look right, right? So on the left side, we see that we're trading through bearish gaps using that support, trading through bearish gaps, right? So right now, I want to see if market's going to retrace back down into it, use it as support, one of these levels of support to go higher, right? And I can also see that we created a BISI here that market used right at 9:30 open to go higher. All right. So yeah, so now withdrawing liquidity, obviously this Monday high, right? And obviously the AM high, if we end up retracing, it'll be the high of the original consolidation. So like next candle here, right? We see we put in a high here, retrace back, all right, using these arrays on the left side of the curve as support, right? So now we should see it to now expand higher to this original consolidation here. All right, so draw liquidity is high, point of interest, these inversion gaps here, price used as PD as point of interest to then retrace higher. All right, we can also see that we had 90-minute SMT, right? Time cycle SMT to indicate a possible low is being put into the market. Right. I know some people may have caught this short, but I think there's like a very small fair value gap to the left side right here, right? Very small fair value gap. There's fair value gap here. Maybe some people took that short, right? So dropping down to lower time frame, right? So on the lower time frame, we want to see, price trading to a point of interest during a time of interest. So the lower time frame, time of interest would be the macro, right? So right here we have 10:45 to 11:15. All right, so we formed a low before this 90-minute SMT right here. ES took out this low, NQ didn't. All right, so therefore we can extend this to 10:42. All right, so lower time frame SMT, we said we have 3-minute SMT, right? 10-minute YM SMT, and obviously the 90-minute SMT, right? We don't also see a change of state and delivery, right? So we see that price here traded above, traded above this bearish fair value gap, closed above it. So that's telling us right there we have a change of state delivery that price is looking, it's confirming that SMT, right? So it's confirming this low that it's the low being put into the market. All right. And what is happening during time of interest is happening during the macro. All right. So our last step is our execution, right? So execution here. All right. So we always want to enter in this inversion gap. We want to enter there. All right. What about the contracts? Stop loss below the S&T low. All right. And our take profit. So let's get rid of this. And our take profit is at the original consolidation. So the high that started that move that we're tracing lower, which is this second 90-minute cycle. All right. And that which is our target. All right. So boom, let's play this here. All right. So boom, we get filled. All right, and we see that right now. So at this point, your stop loss should be, obviously in profit or at break even, right? So boom, right? So right there, as you see this New York AM S&T that happened right here, right? We could have took a big partial, right? This one it closed maybe the full position or 80% of your position, right? In this case, it's letting it run. Boom, we see that we got filled at 1:06 p.m. So long trade, definitely a long trade, right? And we can see that protocol plays out time and time again, right? Waiting for these signatures in price play out, follow the protocol from A to Z, and then usually this market will play in your favor. All right. So appreciate that. So biggest thing about the change state delivery, you want to see a change state delivery on both markets. All right. You want to see it happen on ES and NQ. So you see this little fair value gap here, bearish fair value gap, trade above it, closed above it. Same gap here. You can see it's lined up, trade above it, close above it. So now you want to wait for price to trade back into it, or you're going to enter it as soon as you trade into this bullish fair value gap. All right, guys. So appreciate you guys watching this video. And see you guys in the next lecture.